Hi, it's Tony Barchetti and welcome to one of my videos. Today I'm going to be talking about why big-time investors love investing in franchising and specifically why they like to invest in multi-unit franchises. As big-time investors, we all learn to diversify our assets and don't have all of them in one basket. So obviously we put a bunch of money in the stock market, we diversify those holdings so they're not all in one, two, or three stocks. So we also take some of our investments and we put them into real estate holdings. Again, maybe a couple apartment complexes and a few other duplex, triplex type rentals. We're diversifying. Another option that a lot of smart investors figured out is to own multi-unit chains of franchises, such as many owners have many McDonald's or Burger Kings or KFCs. They might own a dozen of them because they know the value of spreading their holdings and having good models that are proven to make profits with managers in place, and you're not having to run those businesses yourself. As a franchise consultant, I know many type of chains that are new, sweeping the country, but have tons of good, lucrative territories available, and we can talk about those. But today I'm just talking about why those kind of investments work. Let's first talk about leverage. As investors, we understand what leverage means. So I'm going to make it specific to franchising. Let's say I have one of those great absentee models where you can buy into a territory that has 3 units available in a Des Moines or Omaha or Jacksonville. It doesn't matter. I know where they're available. Contact me and I'll see if they're in your area or another area. Since you're going to be a remote owner anyway, it might not matter. The point is, it costs, let's say, on average $200,000 for one of these chains to get one of them open. You're not going to write a check for $200,000. You're going to leverage your money like smart investors do. So just like when you buy a rental property, you might put a small amount down. You use your leverage and loan to get the loan and let the cash flow of the rental pay the loan off. It's the same in franchising. If it's $200,000 to open one of those, you might put 30, 40, 50,000 in, whatever you can pull off, and let the cash flow be paid by the cash flow of the business. But I'll tell you from my experience that the cash flow in some of these models that I have is 10 times stronger than a rental property. So after the EBITDA might be on one of those that costs $200,000 to get open, $150,000 a year profit, EBITDA. So that's after the royalties and all expenses. You're putting in 50. So the cash on cash ROI on these models are very strong. That's why guys like it. So that's the cash flow, that's the leverage. $150,000 a year after costing about $200,000 to get open, but you only put 50 grand in. So that's just really good cash on cash ROI. And the other thing, since it's their franchises, we have hundreds of other franchises in their system that they have to yearly report their sales and profits. So we're going in knowing that it's a proven model and what the numbers are already going to be. Now they're going to be averages. And of course, sometimes 20% of the system is knocking it out of the park. 20% of the system might be sucking wind. And 60%, usually a bell curve in all franchising, are doing those average numbers in the middle. So your job is simply going to be to make sure you've got a good manager in each of those locations and you're off to the races. But the numbers are fairly predictable because they're proven models. So just to summarize, that's why big time investors love to diversify into franchising, buy 2, 3, 4, 5, 6 units in a territory, in a city, on systems that are proven to be making money in other parts of the country. It's spreading. I know what they are. They're spreading, but they haven't gotten everywhere yet. And if you want to diversify and get into some franchising models, let's talk, because it's really sound investing. Take care. Talk to you soon.